Hello, everyone. Welcome to TaxExterminator.com, where we kill taxes dead. You're going to learn how to reduce your taxes legally beginning today. Hi, I'm Brent Jordan. I'll be your host for this particular segment. I'm a veteran tax attorney, a former UCLA adjunct professor, and current district court trial judge. Today's webinar is entitled The 12 Biggest Tax Mistakes That Cost Business Owners Thousands of Dollars Each Year. This webinar is based upon the following legal authority: the IRS Tax Code, United States Treasury regulations and tax court rulings, and the IRS Revenue Procedures, private letter rulings, publications, the manual, and tax forms. Today's segment is entitled Missing Entertainment Deductions. But before we begin, a little bit of humor. In this comic, an individual opens a letter from the IRS and it reads, "Dear Sir, we have misused all of the money that you sent us, and we need you to send us more. Thank you. Internal Revenue Service." The missing entertainment deductions that most business owners don't address or have no idea about involve gifts, events, sports, real property, and personal property. Let's take them one at a time. As far as gifts are concerned, the IRS is very stingy. You can only give a physical gift, a gift of personal property to an individual that does not exceed $25. So in other words, if you want to give someone a television or a camera or a computer, something for their office, you'll be limited to $25 per individual per year. But here at Tax Exterminator, we kill taxes dead. Here's 2 quick ways to obtain a deduction in excess of the $25. First, give the gift, such as a television, to the entire business, to the entire office, to a group of individuals, and not to any specific person. Also, give a gift of entertainment, such as tickets to a concert, or tickets to a theater event, or a sporting event. There's various requirements to lift this $2,500 threshold through a gift of entertainment, but the IRS does bless this ability to increase the gift limit. Next, let's look at events. Say you want to bring a customer or prospective customer to a sporting event, to a rock and roll concert, to a theatrical event of a Broadway show that's come to your town, to a movie, to a nightclub, even to Disneyland. The IRS will allow you as a business owner to obtain an entertainment deduction if you have prearranged that event with your customer or business prospect. Second, it's at a business setting and you have a business discussion within the correct time period of the event. In other words, with a proper tax strategy, you can attend a nightclub with a client or prospective client and obtain an entertainment deduction for the expenses that evening. Now, what if you're going to a sports activity? Well, there's two things you need to look at. First, are you participating in the sport? Or secondly, are you attempting to obtain a deduction for your sport membership? Look at these examples. You're going to a golf course with a client or prospective client. You're going to play tennis with that individual, or racquetball, or go skiing, boating, or fishing. Well, if you're participating in the sport and you have a business discussion, yes, the IRS permits an entertainment deduction. However, no one is entitled to a deduction for the sport membership or club membership, not even Tiger Woods. Next, turning to real property. Let's say you have a vacation home or a ski lodge, a timeshare, you own a tennis court or a bowling alley even. Can you write off that home or that court or that alley? There's very specific rules in this regard. The IRS will permit a business owner to obtain an entertainment deduction for the cost of the meal or the cost of the utilities for the particular day he or she brings a customer or prospective customer to this facility. But there's very narrow rules as far as obtaining a deduction for the actual cost of the facility. However, if you follow the stringent requirements of the IRS, the real property can be written off through the entertainment deduction category. Finally, personal property. Let's say you're this fortunate individual who owns a Learjet, or you have a yacht or a boat, or a luxury car, or a mobile home, and you bring a customer or prospective customer with you on a ride. What can you deduct? Well, normally, if you have the prearranged meeting and the business discussion, this is a proper business setting. Each of these items is approved by the IRS, but there are certain limitations on the actual deductions you can obtain as a business owner when you fly your Learjet or take your boat with a client or prospective client. Nevertheless, with proper tax strategies, the IRS will approve of these deductions. One person once said, "People who complain about taxes can be divided into two classes, men and women. There's a treasure chest of free money buried in your business. Claim it today." This concludes another segment of our webinar entitled "The 12 Biggest Tax Mistakes That Cost Business Owners Thousands of Dollars Each Year." Thanks for joining us here at taxexterminator.com, home of the Proactive Tax Plan. We look forward to seeing you at segment number 6, Missing Vehicle Deductions. For a limited time only, I'm giving away a free copy of my tax strategy book entitled 10 Powerful Tax Strategies That Pass IRS Scrutiny. I published the book with Amazon.com and Barnes & Noble, and you can obtain a free copy right now, today, at taxexterminator.com.